Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Friday the 26th of July 2013. Well, can you believe it's been a year ago today since Mario Draghi said those famous words, "We will do whatever it takes to save the euro." Back then, the euro was hovering around about that 120 level. So we've had a 10% increase in the euro since then. And today, almost to mark that anniversary, we've seen the euro surge in value as the dollar has sold off quite sharply across the board. Let's go back to the euro for a moment. Let's take a look at this chart here. This is a weekly chart, so it's a longer term chart than maybe what you're used to. But the reason why I'm showing it to you is because the euro was actually shot above a lot of the moving averages. It's above the daily clouds, but it's still in a technical uptrend. So looking for key resistance levels is a bit trickier. You've got to expand your time zone. Basically, we're currently trading around about that 132, just around about 132, kind of 80 to 90, just getting stuck a little bit around about 133. We are starting to look a bit overbought. We may pull back a little bit, but we do think that the downside is going to be protected and that we will continue to move higher, potentially because we have a lot of event risk regarding the dollar next week, and that could be slightly dollar negative as we lead up to those events, which I'll talk more about in a minute. Key resistance in the medium term, though, is at 134.15. That is the yellow line in the chart, is the 200-week moving average. If the euro continues to move higher, just keep that at the back of your head. I know a lot of people are saying, well, you know, we've got an ECB meeting. They may talk about forward guidance. They may be quite dovish. If they do elaborate more on forward guidance, then we could see some profit taking around about these levels, maybe into 134.50. A very bullish development at the end of this week would obviously be a close around about that 133 level. So do watch out for that. Now, the other pair that we're looking at today is cable. Let's take a look at that. That's shot right above the base of the daily Ichimoku cloud there, which came in at 152.80. Remember yesterday with that better than expected, or that as expected, sorry, GDP number from the UK, we actually saw the pound sell off. So it was a bit of buy the rumour, sell the fact. One of the reasons why the pound has easily made up that weakness so far was actually because of two events that really weighed on the dollar, two news events. One was a Wall Street Journal article which basically said that the Fed are going to stay on hold next week, which kind of put paid to any expectations that they might start tapering earlier. And then the second reason was because the Senate, some members of the Senate are reportedly willing to support Janet Yellen as the next governor of the Federal Reserve. She's the vice chair at the moment, and she is very dovish. She is the uber dove, who's at the very dovish end of that spectrum, and that's also weighed on the dollar, weighed on short-term treasury yields as well, and that's just pulled that down. So that's had a positive impact on cable. Where will we go to now? Well, as I said with euro, if we continue to see kind of a weaker dollar or a bit of dollar bearish momentum into some event risks next week, including the FOMC meeting, Q2 GDP for the US, and then also the non-farm payrolls next Friday, then we could see us get back to that 154.70 level. That's a massive level. We've got above 154 already earlier, 154.70, top of that daily Ichimoku cloud. If we fall below, if we get above there, that may attract some sort of take profit level. But right now, momentum, the longer term momentum anyway, still very much to the upside. Okay, everyone, thanks so much for joining. Please do join us soon for more. Bye-bye.